Welcome back to Everyday Economics, the podcast that helps you learn about the economic world happening around you every day. I'm your host, Chris Krug, CEO of the 501c3 nonprofit, nonpartisan Franklin News Foundation. Everyday Economics is a production of America's Talking Network. You can subscribe to all of our podcasts at americastalking.com. To support Everyday Economics, please make a tax-deductible charitable contribution by clicking the link in the show description. We are recording this episode on Friday, July 19th, and joining me, as always, my friend and partner, Dr. Orphe Divounguy, PhD economist. Dr. O, I'm just going to come right out and tell you, this has been one of the most intense, busiest weeks in my career in publishing. You know, former President Donald Trump was very nearly assassinated Saturday, in Butler, Pennsylvania. And then we had the Republican National Convention, which was pretty intense. And in the midst of that, President Joe Biden came down with COVID, I believe, for the third time, and has somewhat disappeared, sort of from public view. There's a lot of turmoil politically happening, and certainly a lot of things happening in politics right now. And at the same time, you and I don't often talk about the sort of the connection between U.S. politics and the U.S. stock market and the U.S. economy, because there's not always these moments where everything is happening at once and laying on top of each other. But there was a lot of volatility in the U.S. markets this past week. At one point, the Dow went up while the NASDAQ went flying down. The NASDAQ has had a rough week. I mean, the big tech players have really gotten socked in terms of stock prices. And then the Dow had an absolutely brutal day. And inside of the Dow, of course, there are some tech companies. But there are a lot of companies that have been on the Dow for years. Energy companies, there are banking companies. So I'm not going to ask you to try to make sense of all of it, but I'll ask you this question. I mean, what do you feel were the key drivers this week, and what's that going to do to returns in other aspects of the economy?
Well, look, first of all, I don't think the political stuff is having a big impact. And I might be an outlier here, but I don't think the political stuff is having a huge impact. I think that you have basically, the NVIDIAs of the world and all of the big tech companies that saw a massive rebound as we start talking about rate cuts. And basically these companies do really well when the economy is doing really, really well, and the economy is slowing. But at the same time, the economy is not going into a recession, and inflation has come down. And with inflation coming down and interest rates easing, it really opens the door for some of these smaller companies that had been kind of left out, and this kind of market broadening to take place. Because the economy is not basically going into a recession, there's no reason for people to panic and get out of the big tech stocks. They're probably just profit taking, which makes a lot of sense, and diversifying their portfolio a little bit, because some of these smaller stocks are probably going to do well in an economy that is growing at a more sustainable pace. That's it. I've heard commentators talk about a pro small business Donald Trump and saying, hey, he's going to be pro-America, pro-small business, pro-U.S. growth. And so we have to consider that in our allocation. And I'd say, ultimately, people pay attention, but is it really going to get you to sell if you had to sell anything, to sell some of these big names, these big tech companies? Other people started talking about the whole Taiwan debacle, and how Donald Trump goes out and talks about, them having to pay their way or for their defense or whatever. And again, I think it's very much irrelevant, because we're not going to start making these chips in America. It's just too costly.
Mm-hmm. So in practical terms, I mean, that if I can distill what you're saying, for the benefit of the people that are listening to us, political rhetoric doesn't necessarily have much to do with the actual reality of the.
No. And it affects you and the way you invest. I think you're in trouble. I think you're in trouble. I think you need to consider the economy. You need to consider the long-term prospects of these individual companies that you're invested in or investing in, right? I think so far the economy looks good. It's an economy that's slowing down, but that's not crashing. It's an economy that is basically inflation is cooling to a more sustainable pace, a more sustainable level. And that more sustainable level is conducive to economic growth, right? When people's wages are not rising faster than rents, it allows them to do stuff. It allows them to move to where they need to go. It allows them to move to where the jobs are. It allows them to do. And so inflation easing is essentially a tailwind, right? Some people might argue, well, it's only easing because the consumer is in trouble. No, it's not true, because we saw income in the personal income actually rising much faster than spending, the labor market still being a source of support. And when you take all that together, consumers are showing restraint. They're not yet in a lot of trouble. They're just showing restraint, and they're saving a higher share of their income. And that's what we're seeing. So we're in a place where the economy is actually benefiting from slowing inflation being a tailwind. Interest rates likely to ease. The market's pricing 2 or 3 rate cuts. We may not get 2 or 3 rate cuts. We might just get one.
There was some news on the political front as it pertained to the Federal Reserve. I mean, there was, with Donald Trump being, at the RNC and certainly there being a fair amount of access to him specifically at this time, he was asked whether or not he would retain Jay Powell as the Fed chairman. And he said he would, quote unquote, if he was doing the right thing. And Trump had said that he does not think that interest rates should be cut prior to the election.
But Trump is not an economist.
Well, that's true. But he said, let me just tell you what he said. He said the Republican nominee, and this is straight from the Financial Times, the Republican nominee acknowledged in an interview with Bloomberg that the central bank would, quote unquote, maybe cut interest rates before the election on November 5th, but added, and this is a quote from Trump, it's something that they know they shouldn't be doing.
Well, look, let's put it this way. It's actually never happened. It's never happened that the Fed would change direction before an election. If they were hiking, they usually would keep hiking. If they were holding, they would hold. If they were cutting, they would cut. I heard that from Jim Bianco on Bloomberg Radio a couple of days ago, and it's true. It's never actually happened. But that doesn't mean it can't happen. If the economy starts to slow down at a tremendous pace, if inflation is falling rapidly and inflation expectations begin to fall rapidly, if the labor market starts to show some cracks, the Fed will have to cut.
So Fed Chairman Jerome Powell this week did speak, and he said on Monday, and I'll pull this directly from the FT so I get it right. Powell said on Monday that the central bank was gaining greater confidence that inflation was easing back to the Fed's target of 2%, adding to expectations that the central bank would make its first rate cut since 2020 at its meeting in September, just weeks before the election. So that is what is driving this conversation.
Yeah, I mean, we're probably not there yet, is what I'm hearing from people like Christopher Waller, San Francisco Fed President Mary Daly. We're probably not there yet. Everything is signaling, though, we're going there and that we're going to get there soon. If we get a couple of months of data that continue to show inflation easing towards the 2% target, the cuts are coming. I mean, Powell himself said, they're not going to wait to cut when inflation reaches 2%. The cuts would have to begin before. And that's common sense. So the cuts are coming. They're just not, we're just not there quite yet. And it has nothing to do with the election. I think it's important that people understand that. It has absolutely nothing to do with the election. It has everything to do with where the economy is.
Yes, in fairness, we've been trending in this direction, and the fact that cuts have been delayed this year, we expected, an estimate. There was an initial estimate of 2. You had some analysts that were saying 6, which was bananas, and we said that straight away. But it has been trending in this direction. So let's call it good there. Thank you for the insights as always. For Orphe Divounguy, this has been Chris Krug. Subscribe to Everyday Economics and dozens of other quality podcasts at americastalking.com.